Let's chat commodities now, but before we do that, let's get the rupee on your screens. They're very strong third day coming in for the currency there, nearly a percentage point off again on your screen. 65.33 is where we are trading at this point in time. Very strong gains for a third straight day coming in for the currency. Let's get in then. Kunal Shah, he's head of research, Nirmal Bang Commodities, and he joins us live on the show. Kunal, hi, welcome. Before we talk about commodities, what's your sense coming in for the currency market now? Because 65.30 already, are you looking at 65 breaching as well, the way we seem to be getting in the momentum?
Yes, there was too much pessimism in the market on the rupee, and we felt that this move was quite exaggerated, looking at the valuation and other factors. As far as the US QE3 is concerned, I think that is priced in. Whatever weakness we've seen in last 3 months in all the emerging market currencies, I think the bond purchase tapering is fully priced in rupee, and even with the US bond yields surging about 3%, we are seeing almost 1.5% strength in the Indian rupee. So yes, you are going to see a further strength, and in next 10 to 15 days, you are going to see rupee well below 64 as far as the spot is concerned.
Kunal, that kind of a calculation coming in for the currency, what's your sense for commodities, especially for gold and silver prices, where we have seen a decline coming in for the international markets, especially appreciation in the rupee as well. So how much further decline would you expect in gold?
Well, the investors have to brace themselves for another round of massive selling in gold. Maybe the way US 10-year bond yields, the way it is moving up, most of the estimates were indicating that it would reach 3% by the end of the December 2013. And in fact, in the month of September only, we have 3%. So the way US economy is recovering, the way positive numbers are coming from Europe, the way economic data have been encouraging from UK, investors will be forced to come out of gold and place a bets on more riskier assets. So the outlook on gold is not looking very bullish. Another round of ETF selling is likely, and we are going to see heavy correction in gold from present level. So we would recommend to go short in gold at 32,000 for the trading perspective, with the stop loss plays above 32,300, and expect prices to go down and test levels of 31,500. Next 1 month, we expect gold prices to comfortably trade below 30,000 rupees in Indian rupee and $1,300 below on COMEX.
Kunal, let's talk a slightly longer term as well. How would you look at the gold prices around Diwali, around this year end as well? Because many people who would want to trade gold, especially in the physical market, would be quite interested to know that.
Well, a lot of people had been talking about the Diwali gold is going to again test 40,000. I don't think so. It's a big catch. We are going to see more pain rather than any gain in Diwali. Remember in 1980s and in 1982 when US 10-year bond yield climbed by 5%, at that time we've seen a $500 correction with the gold prices trading at 800 rupees. So now looking at the way already gold prices have corrected, we feel a correction of at least $200 for the 2 months, 3 months horizon cannot be ruled out. So be on a selling side. I think the jewelry demand, robust jewelry demand won't be enough to save gold.
Kunal, how would you look at the silver prices? Would you see a similar kind of decline coming in for this commodity as well? Or do you think the positive data and especially a pickup in growth might see support for base metals and that might trickle into silver as well?
No, the silver surplus has grown considerably during this year. And as compared to the estimates, whatever estimates are there, the silver surplus has grown by 70 million ounces this year. So I do not see any meaningful upside in silver also. Silver also not likely to go above $24, $24.50. And again, on a downside, by the Diwali, we feel it can test levels of $21 per ounce.
How would you look at the crude prices now? Because while markets are still awaiting fresh developments on the Syria front, all the news has been factored into the markets already. We have seen a decline coming in for US inventories as well. At these current levels, in this range of 105 to 109 that we have been trading in sense of NYMEX, how are you looking at the Indian prices calculation?
I'm slightly optimistic for the short term, mainly on back of expectation of positive payrolls data tonight, and that could trigger further upside. The inventories have been positive. We have supply concerns from Libya, which actually supports Brent, but the Middle East tension coupled with the positive expectation of a very important economic report tonight, I think that can trigger buying in crude oil. So for the trading aspect, I would recommend to go long in crude oil at current level 7100, 7120, and expect prices to test levels of 7200. So in spite of strength in rupee, we are of the view that crude oil prices can move up during evening session.
Kunal, how would you want to trade a look at the base metal prices? Because on one side there are tapering concerns in the market, but on the other side, as you pointed out, the US, Europe data has been positive, so has been China. There are some reports on restocking as well happening there. In that light, how would you look at the metal prices?
Well, base metal is not looking very bullish. Looking at the macro problems in China, if you analyze the problems, the credit growth in China is cooled down drastically. This data has come recently only. And apart from that, the non-NPAs of Chinese banks have soared from 13 billion yuan to almost 256 billion yuan. So I am of the view that whatever upside, whatever optimism which was there on account of global economy improving, Europe demand improving, I think that is partly factored in. The only metal which looks better to me because of the positive economic data from Europe is nickel. So one can do bargain hunting in nickel at 907, 910 with a stop loss placed below 895 and expect nickel prices to shoot up and test levels of 925 to 930.
Kunal, even as we head into the US non-farm payroll data today and the markets would really be functioning at that time, what's your sense on the next week now? Given this light of what may happen today in the evening, how would you want to carry your positions in the coming week?
I want to carry with a short position in gold, and I think the most likely, there is a likelihood that today non-farm payroll numbers may come above 2 lakh and the unemployment rate may drop by 7.4 to 7.3%. And that would trigger another wave of selling in gold. So gold is our pick for the next week and even for tonight.